Hello traders, Cory Mitchell here with TradeThatSwing.com. In this video we're going to look over a S&P 500, or the most common trading units for those are SPY, VOO, ES futures, anything that tracks the S&P 500 index you could use for this type of strategy. We're going to look at a gap fill strategy. It's important to note that we are looking at data for the last, if we zoom out, I'm looking at data for the last 6 months for this strategy. So you can see we are right here. We have been in an uptrend for multiple months now. 1 month, 2 months, 3 months, 4 months, 5 months. So the 6 month time frame is going to include a bit of this, which was a bit of a downtrend. But over the last 5 months, we have been in an uptrend. So when we go back to the, let's use a 5-minute chart. We could also use a 1-minute chart. Anything, 15-minute. We're going to look at a couple different tactics for trading a gap, and why I'm recording it this day. So we're August 14th, 2025. If we go to Edgeful, very useful platform that looks at statistics for a load of different patterns, engulfing patterns, fair value gaps, gap fills, which is what we're looking at. We're also going to look at the opening range breakout, opening candle continuation, just loads of different things. You can get actual statistics on how these things have worked or haven't worked. And so what we see here is on a gap fill, what I'm most interested, I have this set to gap fill. We can just go standard. You can see that gaps fill about 60% of the time over the last 6 months. And if we break it down by size, today when the market opened, we had gap down 3.2%. So if we go by size, we can see, okay, we know we're in this area. We gap down 0.3%, 70% filled. Right, so we're looking at a gap down. How much did the price move? How often did it fill after that? And 70% of the time it filled. We could also look by day of week. So it happens to be a Thursday. 60% of gaps down filled. So not a huge statistical advantage just by day of week, but we're still, kind of up above that 50% mark, which I think would be the bare minimum. You don't want to look for to have an edge unless your risk reward was really good, but we're at 60%. So what does this offer? So we opened up way down here, which leaves potential all the way to up here, which would be the gap fill. So we could color that one green just to let it know what our target is. And we wouldn't want to just jump into this, but we could wait for some other pattern that we trade. So I like trend continuation. So we have a big surge up here. We start pulling back, waiting for a new candle high that occurs right there. So we could have taken a trade right there. And we see that with a target up near where the gap would fill. So the prior close gives us about a 2.6 to 1 reward to risk, depending on your exact entry point. We got it a little bit later, it could be 2.5, but overall, pretty good risk reward. Another way we could do this, we could go into other reports on Edgefill and see, let's go opening candle continuation. So what we see here is that if the opening candle, and it's set to 15 minutes, if the price moves above the opening candle, we have a 64% green day. Or if that opening candle is green, then the day is green 64% of the time. So we could simply wait for the opening candle to form. So that'd be like a 15-minute chart if we had that set to 15 minutes. Let's zoom back in again. So opening candle green, so it's like, okay, that gives us a green light to enter. So we're entering when the price breaks above that opening range high. That puts our entry right there. And we still have a great risk reward, 1.7 to 1 reward to risk. I'm going to drop down to a 5-minute chart just so you can see my notes. Right, so there's our opening 15-minute range. Price moves outside of it. We know that if the first 15-minute candle is green, the price has a really good chance of closing the day in the green. So that could be a possible entry point. So that's just one. However you wanted to enter this, you could. Then you'd also want to set a stop loss level. If we go to opening candle continuations and we go to let's go to opening range breakout. So this is basically the entry we're using. We had our opening range, we're getting a breakout of it, and we're entering. Let's go to buy retracement. So this shows us that even though there's an upward bias for the opening candle continuation, the opening candle breakout, which again is 15 minutes opening range breakout, this shows us basically that doesn't mean it's going to stay above that opening range. It retraces to the 25% retracement almost half the time. It gets to 50% almost half the time, but you can see by 75% it really drops off. Only 15% of the time will it retrace all the way back to that 75%. So that's not a bad place to put our stop loss. So if we're entering on an opening candle or opening range breakout, right, waiting for that first 15 minutes, and then if it breaks out to the upside, because we want this gap to fill, or that's what the bias is, filling that gap, and we enter right around here, and instead of putting our stop loss at the day low, which moves our risk reward to more about 1.2 to 1, still okay, we know that it's pretty rare, only 15% of the time will the price retrace all the way back to this 75% level. So if you think of this range, I've drawn in the little markers here. So this would be a 25% retracement, this would be a 15% retracement, or 50%, this would be a 75% retracement of this opening range. We can put our stop loss right near that 75%, and it won't get hit too often. It will get hit very rarely, but not that often. So we have a few things going on here. We have a gap down, which we see right in the morning. That tells us, oh, we have a possibility here. We're in an overall uptrend. So if the price breaks higher, we're looking for that gap to fill. That gives us our target. Then this opening range gives us a possible entry point, or we could use any other entry technique. Like I mentioned, I use the TC pattern, as I call it. I like using that. But this would work well too. Opening range breakout. That gives us a bias. We have the opening candle continuation, which tells us once that occurs, there's a bias toward the day finishing higher. Opening candle, opening range lets us know that retracements back into the range don't usually eclipse the 75% mark. So that gives us a stop loss location. So we have a whole bunch of things now lining up, and this gives us our chance. Come this point, we're waiting for that first 15 minutes, if we're waiting for that, or the TC or whatever, then we can start to work out our risk reward. And we get to see, okay, well, if it breaks, we're at 15 minutes. If it breaks above this, we have all this profit potential, and our stop loss will go here. We can see our risk reward is about 1.7 to 1. That's really good. If we used my TC style entry, You know, as this starts pulling back, we're saying, okay, if we get a move up above a candle high, this is a pretty big candle, but you can see we have a big profit potential there. So this would still be okay. It also kind of aligns. You know, we had the opening range hasn't quite fully formed yet, but we had a nice deeper pullback, and we're, you know, still well above the lows. If we start moving back up, uptrend still intact for the day, even though we gapped lower. You know, nice sharp move up to new swing highs for the day, intraday. And we have this move up potential. So you can see this is a pretty, it's more of a swing style entry. So this could be used alongside other more scalpy strategies and other things. Maybe you could even look to add into positions. So, you know, if it starts holding in this area and then moving up, we can maybe add to that position, increase our profit a little bit. So there's a whole bunch of things you could do with this strategy to potentially enhance it. But this would be the basic, just waiting for some sort of data that tells us, hey, we're in a more bullish environment now. We're looking for that gap fill. And this one played out quite nicely. We use the target because there are no guarantees that the price is going to stay above that gap fill. As you can see here, it gets a little bit above it and gets back below. Something that's pretty cool on this is you could also go gap fill, and you could customize this. So let's go to this report by size. So on today, we know our gap down was 0.32%. So we're at a 69% fill rate. What if we go here, this is based on 100% fill. So this is how often does it hit that prior close. We could bump this up to 110% of whatever the gap was and see if it changes. Still at 69%. That's telling us that it often moves a little bit above the actual gap, as we saw in the case today. Now if we go to, let's do 120% of whatever that gap was. So if the gap was 0.3%, this is basically saying, did the price move 0.36%? Save it. Go back to what we're looking at. Still the same. So we can add a little bit of buffer there to potentially lock in a bit more profit. Right? So today, in this case, our gap down was 1.32 or 0.32%. So what this stat is telling us is if we go times that by 1.2, I believe that's about 0.38%. Just double check. Yeah, 1.384%. So 1.38%. So from the gap, let's use our price range. So we opened down here. .38 is right around there. So we could actually put our target there without really decreasing the odds of that target getting hit. Basically, we're looking at a little bit, capturing a little bit extra. Let's see if we can keep going up. You know, now eventually we're going to hit a point where the rate that it gets filled starts dropping off. We're still, so there's been a tendency for the price to overshoot. You can see we're looking at fill percent 130. Yeah, it's tending to continue to move up and above that standard prior close, and you could see what the data does. So take a little bit extra. If we were to do that, that bumps our risk reward up to 2.45 if we use the TC entry, and TC would go just below that swing low. So now we're up to about 4.64 to 1 reward to risk. So you can start to see how you can use actual data to start tweaking these systems to get better risk reward. have a decent idea of what your win rate is, because we know this gap is going to fill about 60% of the time on average. And in this case, about 70% of the time, but we do have a stop loss there, so sometimes that'll end up getting triggered. So that's going to maybe sometimes give us a losing trade, even though the price did end up continuing on. We might have a re-entry in that case. But we know 60 to kind of 70% is kind of what we're looking at for win rate on this type of strategy. And then we're looking at a risk reward. We would only take the trade if it offered us a decent risk reward. If the gap's super tiny and there's almost no room for it to move up to the prior close or even a bit beyond it, then there'd be no point taking the trade. But in this case, we did have a nice gap down. We had lots of room back up for that gap to fill. We got an entry point. We have an opening range continuation, which gives us an upward bias. We have a good place for a stop loss location. We have a good risk reward. Basically, a whole bunch of things are aligning for us to take a trade like this. Again, you could use this on its own if you're more of just take one trade and kind of done, just let it play out. Or you could use this alongside. Maybe you're trading some active stocks and you're scalping those. You could have this going on in the background, because it doesn't really, once you have those initial levels set and it's like, okay, I'm in, I know I can place my stop loss right here, I know where my target's going, you can have your orders out, let it play out. It doesn't take a whole lot of management or anything. And yeah, you can build strategies like this just by looking at charts. You could also use actual specific percentages and stuff, like what Edgeful builds for us. And I'm starting to use this to build some additional strategies into my trading, so you can check that out. Yeah, cool gap fill strategy. Hope you found this helpful. You can check out links in I have an article on this which breaks it down, so you can read the article, see how everything works, and yeah, check that out. If you like it, please share. Happy trading.